Right now, in half of Australia's capital cities, apartments are growing faster than houses. In Brisbane, units are up almost 22% over the past year, while houses managed 18%. In Perth, units are running at nearly 28%. If you've spent any time around Australian property, that should feel wrong, because for decades, the rule has been the exact opposite, and not by a little. So what's going on? Is the old wisdom dead? Should you forget houses and pile into apartments? Not so fast, because what's happening in 2026 is the exception that proves the rule. And once you understand why apartments normally lag houses, and the one condition that flips it, you'll read the property market very differently. Quick note before we start. This is general information, not financial advice. Nothing here is a recommendation to buy or sell anything. Let's start with the rule. Over almost any long stretch of Australian history, houses outgrow apartments. And the reason comes down to a single word: land. When you buy a house, you're really buying two things: a building and the dirt underneath it. And here's the part most people get backwards. The building is the bit that goes down in value. Bricks age, kitchens date, roofs wear out. It's the land that does the heavy lifting, because they're not making any more of it, and everyone wants to live on the good bits. An apartment flips that ratio. You're buying a lot of building and almost no land. A thin slice of a shared block, split between dozens of owners. You've bought mostly the part that depreciates, and barely any of the part that appreciates. That's the whole story in one sentence. And the numbers are stark. In the combined capital cities, the median house is now around $1.09 million. The median unit, around $728,000. That's a gap of roughly $362,000, nearly half the value of the unit itself. Now here's the part that matters. 5 years ago, that gap was about 20%. Today it's closer to 50%. The premium for a house over an apartment hasn't just held, it's more than doubled. And it shows up when people actually sell. In the most recent resale figures, the typical house resold for a profit of $355,000. For units, it was $205,000. That's a house gain 73% larger. On top of that, more than 97% of house resales turned a profit at all, versus 90% for units. Zoom right out and it's the same picture. Over 30 years in regional Australia, house values rose 314%, while units rose 213%. Different market, same pattern. Houses win the long game. There's a second reason, and it's simple: supply. You can't manufacture land, but you absolutely can manufacture apartments. When a suburb gets hot, developers respond by building up. One block of land, 100 new units. That flood of new supply caps how fast existing apartment values can climb. Houses don't have that pressure valve. Add the ongoing strata fees and body corporate costs quietly eating into an apartment owner's returns, and the deck is stacked toward houses. So that's the rule, and it's a strong one. Which brings us back to 2026 and the mystery we opened with. If houses are so clearly superior, why are apartments suddenly winning in Brisbane, Perth, Adelaide and Sydney? Here's the answer, and it's the most important idea in this video. Apartments don't start winning because they got better. They start winning when houses get too expensive to reach. Think about what that 50% premium actually does. To buy a median house in Sydney today, a household needs an income of around $178,000 a year. For a median unit, about $102,000. That's a $75,000 gap in required income. For the same city, the same suburbs, the same schools. At some point, the house simply moves out of reach for ordinary buyers. And when it does, all that demand doesn't vanish. It redirects straight into apartments. That's what's happening now. Houses ran so hard for so long that they priced out the very buyers who'd normally chase them. So those buyers pivoted to the only thing they could still afford, and unit values took off. Brisbane units up almost 22%, Perth units up nearly 28%. It's not that the land principle stopped working, it's that affordability hit a ceiling, and the tug of war swung the other way. It helps that rents are climbing almost 6% a year, vacancies are down near 1.5%, well below the decade average, and rental yields are recovering. For a lot of buyers, an apartment now stacks up on income in a way it hasn't in years. So what do you actually do with this? A few things. First, don't take the 2026 reversal and assume it's permanent. It's cyclical, and it's already cooling. National values grew just 0.6% over the most recent quarter. The affordability squeeze driving units can ease, and when it does, the land advantage reasserts itself. Second, be honest about your time horizon. Australians hold property for around 9 years on average. Over a stretch that long, the land versus building maths tends to win out. And that favours houses, or at least apartments, with a genuine land component, like a small block of townhouses over a unit in a high-rise tower. Third, none of this makes apartments a mistake. For plenty of people, a well-located unit at a reachable price, with a solid yield and low vacancy, is a smarter move than stretching for a house you can barely service. Especially with the cash rate at 4.35% and mortgages near 6%. Overextending for the better asset can be the worst decision of the lot. And as always, none of this replaces an emergency fund and a serviceability buffer that can survive a rate rise. Here's the synthesis to take away. Apartment growth lags houses because you're buying mostly building and barely any land. And land is where the growth lives. That's the rule. But when the price gap stretches so far that houses become unaffordable, demand floods into apartments and the ranking flips. And that's exactly what 2026 is showing us. It's not houses versus apartments. It's land versus affordability. Fighting it out over every cycle. Understand which force is winning right now. In your city, at your price point. And you'll make a far better decision than someone just chasing last year's winner. This has been general information only. Do your own research, and if you need it, speak to a licensed professional. If this changed how you think about property, you know what to do.